Hey, it's Rick. It's Thursday, October the 19th. Haven't done an update for about 10 days, so although really not much positive has happened in the market in that 10 days, so hasn't been really much to talk about. But I'll give you my take on where we are, and I'll quickly review. There are some pockets of ideas out there, but they're few and far between. So I have here the weekly chart of the equal weight S&P 500. And as you can see, we're still in this big chop. We're actually slightly lower than when we started the year. Just going sideways, we're below the 10-week and the 30-week moving average. So clear signal that, and go to the daily. We're below the 8-week, the 21-week, and the 50-day, or the 8-day, 21-day, and 50-day, which is a clear signal that we should be 100% cash. Nothing much to do. So I look at the other markets. I look at the equal weight of the Qs, QQQE. You could make an argument here that we are in a potential bull flag. So we've had this up move here, and then we've now forming a flag. And this is generally speaking a bullish pattern. If we can break above this downtrend line here. So that's entirely possible. So the Qs are looking a little stronger. So we'll just keep an eye on that and see how it goes. If it does take out the low from 2 weeks ago, cannot be a good thing. So we got quite a ways more we could fall here. Looking at the small caps, I think it's a pretty ugly picture. Yeah, we're living well below the 10-week and 30-week moving averages. Mid caps paints a very similar story. Yeah, just gone nowhere. So it's been a tough year to make any money. Thankfully, I'm still up, not a whole lot, but at least I'm up. So we'll just try and hang in there. Looking at a couple other things, we're looking at bonds. Yeah, this is the 20-year Treasury bond. That is not a pretty picture. So as interest rates are going higher, obviously, bond prices plummet. So, and looking at this chart, there's more to go in interest rate hikes. So we shall see. Same thing when you look at the US dollar. This has been going straight up. And that's generally not a good thing for the equities markets. And we're sort of stuck here now. So a bit of a pause. If we pause here for 2-3 weeks, generally speaking, the move continues up, but hopefully it rolls over and that'll be good for the equities. So yeah, not a great picture. We look at the Canadian market. I can't get a chart of the Canadian market, but it's really ugly. It's way worse than this, to the point where I actually took a short position in the Royal Bank. See if I can pull that chart up. Yeah, I took a short position last week, and it's performing. I figure I rarely ever short, but I'm figuring if 2024 next year is going to be anything like 2022, the potential for a big downdraft. I have to learn how to, or I should learn how to short and get comfortable with it. So I'm just experimenting right now. So tiny size, but just to get comfortable with some of the setups. But it's essentially just the mirror image. If you flip this in a mirror, you buy the dips, and in the case of being short, every time it bounces up to the 10-week or certainly the 30-week, then it's a sell signal when these are in a downtrend. So anyway, you look at the Canadian charts. most of them looked like this situation. Just move this out of the way for a sec. And I'll show you a couple of positions that I'm in. I'm actually at 32% invested. So my model says I should be 0. But I'm actually at 32% invested. But I'm able to do that because the risk to my equity curve is 0.4%. So my stops, I have enough profit built into the 4 trades that I have, or my stops are tight enough that if I get stopped out, if things go down, the damage to my overall equity curve is negligible. So if it weren't for that fact, I would be virtually 100% cash. But I'm giving myself a bit more slack because where these stocks are profitable. So the first one is Adobe. Entered this 4 days ago. This is normally I would not entertain a stock like this. It's got a market cap of $250 billion. It's way too big for I consider meaningful moves. However, when I look at this chart, this made a move from last May to, oops, still getting used to these darn tools. From May to this big run up here, it gained 50%. And this pullback from here down to here was only 12%. So it's holding up really, really well, which is evident by up top. I'm not going to go into a long explanation here, but this basically shows great relative strength to the overall S&P 500. So on the basis of that pullback, and again, this is a good little cup and handle pattern. You got the cup here, a little handle here, and it's breaking out of it. It's had a tough time the last couple of days because the market has been shit. However, looking at the relative strength, it's holding up much better than the market. But it can't hold up there forever. If the market continues to get weak, this one's going to get pulled down with it. There's no doubt about that. But the worst I'm going to do in this one is break even because I've already pulled off some profit. The next is ANET. Boy, these are slow. Here we go. Not as clean a pattern. I was in this one once before. This one has huge revenue and income growth. Going down here, revenues were 2.4 billion, 2.3, 2.9, going to 4.4, was 4.4 this past year, going to 5.7, and then 6.4 billion. So growing very rapidly, has a reasonable PE of 31. So I entered this one today probably a little prematurely. Really, the best entry would be up here at 198, just over when it sets a new all-time high. But I sort of trying to anticipate it. But again, I took such a tiny position. It'll highly probably get stopped out, but that's the way it goes. Then the third one is ESMT. And these guys are a software company. Oops, wrong symbol. SMT. Engagement. There we are. Software services. And what I like about this, it's pulled up here and then went really tight across here. So I was looking at a 130-minute chart and I entered it in on this day here and then took a partial profit today, which was timely. I got right near the top. And my stop is underneath down here. So the worst I'm going to do is break even on this trade. I entered this trade based on the technical pattern. And then today I decided to do a little research on it. And the reason for this blip in price here was one of the institutions that owns 54% of the company has indicated they're going to sell their stake. So you might think, well, biggest shareholders selling, the stock might go down. But in fact, it went up, and then it's holding up there. So I don't know about you, but my thought process is that maybe they're going to sell this thing for 25, 30 bucks a share, and they're just quietly buying up all of the shares that come free to the market. It hasn't really traded very much since that first big up day. And they'll buy all the shares they can around $20.50 to $21. And no, anyway, that's my premise. If it goes below here at 2031, I'm wrong, probably, and so I'll just stop out of break even. And then the last one is a Canadian company, believe it or not. North American Construction. So these guys are big, heavy contractors. They build the sites for oil sands plants, mining projects. They're relatively small. Revenues are about $600 million, market cap of about $600 million. But they continually beat their earnings. I owned the stock back in here. And it was my biggest gain for the year so far. Sold it like almost near the top. And then now as it's pulling back and we're getting closer to earnings are coming up next week, I'm gradually buying. I bought a couple of tranches of their stock. It actually trades in Toronto as well. So I bought it right around here. Yeah, this price here. So, again, I got a tightish stop underneath here. But if they have, the same day that they announced earnings back here in August, they announced an acquisition of an Australian company that's essentially going to double their sales. It's accretive to earnings. And this thing is only trading at their earnings next year projected to be $2 a share for the current year, that ending in December, and then almost $3 a share in 2024. And so it's basically trading at 7 times forward earnings, and they have a history of beating. So I don't know. I don't see a lot of downside in this one, but we shall see. So that's my logic behind that one. Because normally anybody who's watched me for some time knows that I never buy stocks that are going down. I'm only looking for them to go up. But this one's got a particular story to it, and so we'll see. Maybe a good test of whether you buy the story or you buy what the stock is actually doing. So anyway, that's my rant for the day. So keep your powder dry. There's nothing to do. The market is crap, and I think we're a little ways away from remedying this. Okay, cheers.